Hey everyone, welcome back to my YouTube channel, Signal Trackers. If you're new here, my name is Ethan and I'm so passionate about helping beginners like you or amateurs and professional traders to learn the art of trading. So today we are diving into one of the most important trading concepts, support and resistance. So these levels act as a foundation for understanding the price movement, and also if you go to master them, they will give you a significant turning point and edge in your trading journey. So by the end of this video, I'll be expecting you to learn what support and resistance are, how to identify these levels on a chart, and how to trade using the support and resistance with real-world examples on the graphs. With support and resistance, assuming you have your two levels, you have your level down here and you have your level up there. So the down one level is like a floor, as you see it's a floor. So this one is what we call a support, and the up level, which is upward, is called the resistance. So with support, it's like a floor. It's a price level whereby a downtrend will reverse and change direction because of an increase in demand or the buying pressure is too high. So it will change from a downtrend to an uptrend. So if it was moving in such a manner, so when it reaches this support level, it will change direction and move upwards. Yeah. So now for resistance, for it acts like a ceiling. So where an uptrend will tend to pause or to reverse and change direction because of the too much selling pressure and also the supply within the market. So the price which was an uptrend, like this format, when it reaches this level, it will reverse direction and show a downtrend. So basically that is all about the support and resistance. So in this example, this chart you're seeing here, you notice that some areas whereby the price will stop falling and start to rise, that's called a support area, and regions whereby a price will stop, will find heavy pressure for it to go above it and will change momentum or direction from an uptrend to a downtrend is what we call a resistance level. This is just a basic structure of how you can understand the market, the basic outline, but I'll show you how you can analyze it within the real world example of the graphs. So with the support and resistance, we have the trend line support and resistance, and also the swing lows and high support and resistance. So if I'm having my trend line here, I do my trend line within the market, this. So the price came to this level, it bounced up to this level but failed to break above it, and then came back reverse direction to this level. So it started moving within this trend line. So you will see that this is a perfect trend line support and resistance levels. So this is the support and this is the resistance. This is the resistance level here. So the price, where a price reversed to an uptrend, is the support level, and where a price reversed to a downtrend is the resistance level. So you could look for trades within the support and resistance levels there. So how do you spot and identify support and resistance levels on the chart? For support and resistance, you should use the higher time frames because for them they have a higher strength of respecting the support and resistance levels. So the procedures you can use for identifying the support and resistance levels are, first of all, you need to look for the swing highs and the swing lows on the higher time frame. So this can be my swing high, because as you see, price came to this level here but didn't break it. It came down, then came to this level again, didn't break it. It came down, came to this level back but didn't break it, and it came down. So the up one is called the resistance level, where price has failed to break, and the lower level, I can call it the support level, where price has failed to break lower. Resistance, it has failed to break higher, and support, it has failed to break lower. So in such a case, you can use multiple time frames, as I've said, and look into how you can enter the trade within the support and resistance levels you have seen. So let me elaborate it further here, that as you see, price was in an uptrend. It reached this level and it failed to break it and went lower. So the level whereby it has failed to break it, you identify it. You can use the pin bars, so you can use the trend lines to identify the levels, and also the rectangle boxes to identify the levels, so that you can use them further for your future reference. So price came back in this area again but failed to break it. So a trader would look some trades within this resistance level and then came back to this level but failed again to break this level. So this confirms it as a support level. And also you could see that in this region I had longer and longer wicks. This support level, we had longer price rejections. So the sellers were trying to push the price lower, but still the buyers were insisting that the price should be pushed further. So this readily confirms that this level is a support level. So you look for buys within this region, and also you look for sells within the resistance level. But to enter into the market, you need to confirm the price action. Just enter, otherwise you hit your stop loss, as you could see it at this point here. People's stop losses were hit. This is a rejection candle. So as you enter the trade, you should look into the price action. This is called the top-down analysis from the 4-hour time frame, the 1-hour time frame, also the 15-minute time frame, so that you can avoid being liquidated. Here the price was looking for liquidity before it could go into the determined direction it should be. So speaking of that, also this is the swing high and the swing low support and resistance, but also we have the trend line support and resistance. This is the levels where price bounces and reverses direction when it reaches a trend line, or it reaches a certain level within a trend line. So I can show you this. Swing price reached here. Yeah, this is our trend line. It is an uptrend. So basically, by the way, trend is your best friend. And then we have this. So you draw the trend levels that you see. So assuming I had my first two levels as this, so you see that price came to this region and found a very big rejection from the buyers. So they pushed the market further to this level, and then the sellers were like, no, we should push the market further down to this level. And then the buyers were like, no, we should push the market further up to that level. As you can see, it is within our trend line, so reaching the points of our trend line. Then the sellers were like, no, we should push the market further back to this trend line level. Then the buyers intervened and were like, no, we should push the market further up to this level. As you see, the market has been moving within the trend line. So this is called the trend line support and resistance. And you look for for buys at your different support levels here. Sorry, that hit here, 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 and also there. As for also the resistance levels, you could look for sells at these regions, but as a caution, you should not just enter because the price has shown that has reached your support or resistance levels, but should confirm by the price action for the trades you're going to take, either buys or sells. So I'm going to talk about how you can enter the trade, how you can trade the support and resistance levels. So having known the support and resistance levels, how to draw them and how to spot them in the market, so the next step you're going to do is to learn how to trade the support and resistance levels. So let's move on to the fun part. That's the one on how to trade these levels, and there are two main strategies which we use trading the support and resistance levels. One is called the one is called the bounce strategy, and another one is called the breakout strategy. Some of you call it breakout trading. Yeah, it is okay with that. So with the bounce strategy, in this approach here, you have to wait. For example, the price, this was the first two confirming patterns for your support and resistance levels. So let's see. So now at this level here, you see that the price has hit our resistance level on the trend line and wants to bounce off it. So wait for the price to try to bounce off the trade. So this is it reached our trend line. Let me first remove this out. Okay, so I'm going to use this level here on our trend line. So I'm going to use this level here on our trend line because I drew the trend line, price reached, bounced off, reached again our resistance level on the trend line. So what you have to do with the bounce strategy is that you have to wait for the price to hit this resistance level or to hit a support level of it and bounce off it. So for example, if the price approaches this resistance level and starts to move downwards, it has reached our resistance level and has started to move downwards. So what you have to do, don't just enter a trade immediately, but you look for some signs which shows that really it wants to take a downward trend. For example, at this point here, which I've drawn the straight line, and then you can enter your trade within this region and target the next support level on the trend line. So where do you put your stop loss? This is a sell. So at this level here, you put your stop loss just above the resistance level and you put your take profit at the next support level on the trend line. Basically, that's the same procedures you're going to follow for the support level. Even if this part of the market I've picked has showed us that you can do the same thing. So with the support level, you wait for the price to reach. Maybe here, it can be here, or it can be at this level here, which is a good option. So you wait the price to reach the support level. And it starts to move back up. So what you can do, you can enter the trade when you've seen the patterns of a reversal of direction, and you put your stop loss. This is a long position. For example, I've seen it moving here from this point, so you put your stop loss just below the support level and you take profit at the next resistance level. this is a whopping 3 to 1 to 3 risk to reward ratio. So you have to wait for confirmation. Don't just enter the trade, but wait for confirmation and then you enter the trade. This is with the trend line. So when you want to enter a trade within the trend line support and resistance level, is that you have to wait for price to show confirmation that it is reversing in direction. So if this is at the point whereby you enter the trade from a buy trade at this support level and it has showed a strong rejection candle at the support level, so you enter a trade and put your stop loss just below the support level and put your take profit at the next resistance level. So that's the same thing you do for a resistance level if you're looking for sells at the resistance level. For example, the price reached at this level here and has showed signs of reversing direction. So you enter your trade and put your stop loss just above that level and you put your take profit at the next resistance, at the next support level. But don't just enter the trade because it has just reached the support level. No, you have to wait for it to show signs of a reversal in the direction, then you enter your trade from there. So next is the breakout strategy. So for the breakout strategy, I picked this zone here in the market. It showed a very good example of a breakout strategy for trading the support and resistance level. So this is the ranging market. By the way, it was a ranging market and it was a good option for the breakout strategy. So as you look into the market at this level, we had our consistent ups and down, high and lows. So when it reached this level, it didn't bounce back up, no, but it broke out this level because this was our support level. If you remember, the lower level is the support level where price must bounce from a downtrend, then changes direction to an uptrend. So what you do is that when the price reaches this level and does a breakout, as you have seen here at this level, you can say breakout at this level or breakout at this level, you wait for it to retrace back into the other level. That's the first method you can use, first strategy you can use in the breakout strategy. The first method can be, you can wait for it to retrace back this point and then continue this side, or the moment it just breaks out at this level here, you can put your stop loss. You can open a sell order there. Sorry, let me open this order here. You can open a sell order at this position. You're getting, and then put your stop loss next to the other support levels you see. And by the way, when you're trading, you can target a good risk to reward ratio of a minimum of 2 so that you can cover up the losses you've made in the trade. So you have to wait for confirmation within that market. The confirmation here was this strong candle movement. So this strong candle had a stronger momentum and closed just below our support level. If it was a resistance level, it would close just above resistance level. So you'd come in and trade at this position whereby it has closed, the candle has closed below our support level, and you put the stop loss just above the opening price of that candle which has broken our support level. And you can target a 1 to 2, a 1 to 3, or you can target the next support level you see in the market. If it was a breakout of resistance level, you could target the next support level within the market, or next resistance level within the market, or you can use the Fibonacci retracement tools to see where you can take your profit from. So here are some few tips to help you get started with the support and level trading. Is that you should, first of all, should practice often. If you practice often trading, practice makes perfect, and you become the master of your own strategy. And you should try out demo accounts. So don't start with a live account, otherwise you blow it and you lose morale for trading, or which trading is the way to go, as making money is nowadays online and trading is unlimited market, a market over $2 trillion. And you should also keep your trading journal, because this will be for quicker reference and review of your trades and learn from the mistakes you do. So you need to write down what has worked and what didn't work for you. So that is it for today. We've covered a lot, from understanding what support and resistance are to identifying and trading them. So I hope you found this helpful and feel more confident about applying these concepts. So if you enjoyed the video, don't forget to like, subscribe and hit the notification bell so you never miss an update. Let me know in the comments what you'd like to learn about next, and I'll see you.